This past week was a big earnings week, especially for the semiconductor market. On today's episode, I want to take a closer look at three companies that I'm very bullish on that unfortunately saw a earnings dip. I want to take a closer look and kind of showcase why I am bullish in each company. Let's take a closer look in today's episode. All right, so the first company is one of my favorites, and this is Advanced Micro Devices. This is the number two position in my overall portfolio, and we can see from the peak prior to earnings this week, the stock is down roughly 6.6%. We can see at one point the stock was down it was down almost over 12%. I do believe the day after the company did not impress investors too much, especially with the AI market. And I believe investors are being a little bit impatient. But the other thing, I do believe it was kind of a red day that day where the overall market was kind of just overreacting with a lot of things happening in the macro world for the finance market. I mean, I know when we take a closer look at AMD's current PE ratio is crazy, right? We're sitting at 483, I believe. But when we take a closer look at the forward PE ratio, which is the end of this current fiscal year, the PE ratio drops down to 42, which I personally don't believe is that crazy. And now forward 1 year, which is the end of the next fiscal year, the PE ratio drops down to the mid 20s, roughly 27. So I personally don't believe this is half bad, especially for what the company has in store for the future. Right now, one of the things is this company is seeing a bit of a slowdown, a nice slowdown, because a lot of over inventory correction is impacting both the company's consumer market mainly, but also to some extent in the first half, the data center market right now. So it does seem like this company is no longer a growth story. I do believe it's mainly due to the cycle of the semiconductor space, but in the future, we are going to see more growth opportunities from here. For me, I am super excited about this company's MI300, which is one of their AI accelerators. In the earnings call, the company mentions that, hey, this is not a product till the fourth quarter of 2023, and it's not really going to see ramp up until the first half of 2024, maybe even the second half of 2024. So I believe investors might be a little bit worried that, hey, this is going to take too long, but as a long-term investor, I do believe there's still going to be huge demand for AI accelerators, and AMD is well positioned for that place and to kind of grab a nice amount of market share. So in my opinion, I do believe there is the possibility that these PE ratios based on analyst expectations are being undersold, right? I believe they're underestimating AMD with their overall PE expectations, as this company can definitely benefit from the data center market, and hopefully as the market does seem kind of a turnaround in the semiconductor cycle. Here we can see Lisa Su in their most recent earnings mentioned that, hey, the MI300, they have worked with their entire supply chain, and they feel that they have ample supply for an aggressive ramp in the fourth quarter and into 2024. So again, I do believe the market might be underappreciating the type of growth that the MI300 can actually give AMD based on the supply and demand that we're seeing right now. Let's take a closer look at the second company. This is Microchip Technology. But before we go any further, if you guys are enjoying the episode, make sure to hit the thumbs up. I'm trying to hit 30,000 subs by the end of the year. We just hit 27. So I want to say thank you to everybody. But if you want to support, let me know in the comments below. Are you bullish in any semiconductor company right now? If so, which one? If you want to support the channel a little bit more, if you subscribed already, I do have a semiconductor membership. Hit join and you should see the semiconductor member, where I do weekly videos on the semiconductor space, completely exclusive there. Make sure to check that out. I also have a promotional offer for the Motley Fool. Make sure to check out fool.com/Jose. And finally,
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so the second company, it is Microchip Technology, and this is another one in my portfolio. We can see from its peak in the past 5 days, the company did see a bit of a downturn. We can see the stock is down roughly 10% in the past 5 days after the company reported earnings, I believe Thursday or Friday. So Microchip Technology, for those that don't know, they do provide FPGAs and system on chips. They have a lot of microcontrollers, right? Microcontrollers and microprocessors. This is a very growing market, but then they also have numerous analog solutions as well, like power management. And these are the markets that they hit. They hit numerous megatrends that their products are being used, like IoT, edge computing, data centers, autonomous driving, e-mobility. So they have numerous market opportunities and market trends. If we take a closer look at their most recent earnings, it was up roughly 2.5% quarter over quarter and 16.6% year over year. They did reduce their total debt by $413 million. They returned roughly $350 million to cash to investors. I do enjoy that they are in a growing market. This might be a little bit different than some of my other growth stories. They have growth opportunity, but they're more mature, so they definitely have a little bit more debt than some of my other players. And they do return in forms of dividends and buybacks a lot. Roughly $350 million this past quarter. 210 roughly in dividends and roughly 140 in repurchase. Now, if we take a closer look at the next quarter, they do expect this to increase dramatically. Just in the next quarter, they're planning on repurchasing roughly $340 million in buybacks. So almost a little bit over double than what they did this quarter alone. If we take a closer look at the quarter two fiscal year 2024 guidance, they are already in fiscal year 24. We can see their expectations for revenue is either a decline of 1% quarter over quarter or an increase of 9.3% year over year. Right now, again, we are in this kind of crazy cycle in the semiconductor space. I do believe if we see a decline, it's not going to be as bad. Overall, the company is profitable on a GAAP basis and a non-GAAP basis as well. We can see earnings per share are still expected to grow 11% year over year, and they have great operating margins. Some other things I wanted to mention is this company has been alive for numerous times and has kind of seen numerous semiconductor cycles. We can kind of see the semiconductor sales, and even through those cycles, this company is able to maintain non-GAAP gross margins profitable. Even operating margins have been profitable through the past kind of 15, 20 years that this company has seen numerous semiconductor cycles where the semiconductor market has grown. So overall, I am kind of confident that this company will maintain a great status with the kind of profitability and everything else that they have. So right now, Microchip, I do believe, has numerous growth opportunities thanks to AI and obviously all the other mega trends that we're seeing right now. I am very, very bullish on micro technology. The company did purchase stocks around 300, about the $77 price point. Microchip right now is sitting about 83. So I believe the company is going to continue to buy back at these levels. So I'm super, super excited. They do tell us that, hey, what are the weaknesses they're seeing? The overall macro environment is obviously impacting their supply chain issues, which is causing longer lead times, but they are improving in that. And then they also mentioned China was their weakest region again, as macro softness drove weaker sell-through activity and inventory build at Chinese distributors. So overall, again, this might be a scary cycle for a lot of these semiconductor companies, but I do believe this is going to be more short-term pain than long-term pain. Now, the final company I want to take a closer look at is Qualcomm, ticker QCOM. Another company in my portfolio. We can see from the peak, the stock is down roughly $8.50 this week from the peak of the week. Overall, if we take a closer look, Qualcomm did give us a reason why they're seeing kind of this weakness in their earnings report. The kind of mobile market, which is one of their important, continues to see a bit of a slowdown. They are seeing a slower recovery in China, just like what we saw with Microchip. They also believe that their IoT channel inventories remain elevated at the moment due to weaker demand. So a lot of macroeconomics. They do continue to estimate that the calendar of 2023 will be down at least a high single digit compared to 2022. So a lot of slowdown, and I do believe that's going to happen in a lot of semiconductors. A lot of slowdown this year, maybe even the first half of next year, but I do believe most of this is short-term lived. The company also kind of expects that, hey, if things continue to go the way they do, they might have to do some more layoffs in the first half of 2024. So obviously this could be seen as some of a bearish sentiment for the company. On the bullish sense, the company in the automotive market, even though it's their smallest market, did secure more than 10 new design wins with leading automakers. This is one of their only markets that is growing. In the Internet of Things, they obviously have the recently announced Meta Quest 3, which I believe is coming out this fall. They announced numerous kind of edge networking Internet of Things with their Wi-Fi 7 customers, and they've introduced a nice amount of industrial Internet of Things solutions as well. So the reason I am bullish on Qualcomm is what we call on-device AI. And I've talked about this numerous times, but on-device AI is when you're kind of doing the AI workload locally locally, where opposed to right now it's happening mostly on the cloud, which becomes very, very expensive, and it's not going to be sustainable for all these big tech companies. So they're trying to bring AI to the device. We can see that Microsoft collaborates with Qualcomm to kind of bring Windows PC on device. We did see that with Meta Platforms as well. Meta Platforms is bringing their Llama 2 with Qualcomm, and they're working together to bring Llama 2 to run on Snapdragon-based OEM devices. So we are seeing strong traction on this kind of on-device AI, and I do believe Qualcomm is definitely positioned itself really, really strongly to be one of the leaders here, and make it one of the chips to go for the mobile, maybe some of the laptops and other products out there, especially the IoT products. They do mention that the Snapdragon, which is their main processor, powers Samsung's new Galaxy lineup globally. Again, we are seeing this weakness in the semiconductor market, which is leading a bit of a because of a weakness in the smartphone, in the phone, in the mobile, in the handset market. So Qualcomm is taking a hit. I do believe once this is over, we are going to see some great moves here from Qualcomm, and I will be very, very happy as an investor. I kind of wanted to take a closer look at these three companies compared to a semiconductor ETF, which is VanEck, ticker SMH. The only one outperforming it is AMD, and not by much, right, compared to maybe some of the other players, NVIDIA. I do believe AMD will continue to outperform this in 2024, especially with the MI300. Microchip Technology and Qualcomm are completely underperforming the semiconductor space right now, and I do believe, again, we're seeing kind of the weakness in that spaces that there are, but in the upcoming year for 2024, especially with the way prices are at right now, these are going to be overall market beaters, in my opinion, within the next few years. So I'm very excited about these three companies to adding to my overall portfolio. AMD is already my number 2 position, but the rest are kind of lower in my totem, and I'm super excited to be able to kind of increase this over time and kind of dollar cost average, especially as we're seeing some weakness and the market believes these companies are going to see game over. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.